fostering transparency. Over the past 8 years, it has evolved significantly with the improvement in compliance, stakeholder confidence, and revenue collection. The recent record GST collection of rupees 2.37 lakh crore in April 2025 is a clear reflection of the progress. As we reflect on this journey, today's session provides an opportunity to discuss what has worked, the challenges ahead, and the way forward. We truly honored to be joined by a distinguished panel of speakers, each bring unique expertise and insights. Mr. Rajiv Agrawal, partner at Gravitas Legal, with over 2 decades of experience in consulting, his coro- his core area of focus include dispute resolution, real estate, and family and state laws. Mr. Ikesh Nagpal, Head of Indirect Taxation at AKM Global, with more than 12 years of experience in advising Fortune 500 companies, larger Indian corporates, and startup on complex indirect tax matters, including GST and customs. Mr. Yogesh Gaba, Managing Partner at Gaba and Company, he brings over a decade of deep expertise in indirect taxation, customs, and foreign trade policy, with a strong track record of advising leading MNCs and under the GST regimes. Uh, Mr. Jatin Arora, advocate at Arora Law Offices, a highly respected legal expert with more than 25 years of experience. Mr. Arora specializing in indirect taxation and has been a leading voice in the legal aspect of the GST implementation. We sincerely thank you, our partners, AKM Global, Gravitas Legal, GABA and Company, and Aurora Law Office for their valuable support in making this virtual session possible. Our speaker will explore key aspects of GST, its evolution challenges, and future path. We encourage you to engage more and more, ask as many as questions, and make this most of today's discussion. And we answer all the question at the end of the session. Thank you for joining us for today's session. We hope you find this session very useful. Now, I would like to hand over the stage to Mr. Ikesh Nagpal for giving his presentation. Over to you, Mr. Nagpal.
So, thank you very much. Let me share my screen. So, very good evening to all of you. So, today I will be discussing two topics which have been given to me, that is the GST on transactions with related persons in cross-border arrangement. And the second is the issues basically related with place of supply. So, let's start with the first topic. The first thing is that in transactions with related to cross-border transactions with related persons, that is, let's discuss with exports. Exports of goods is basically when we are sending the goods from India to a place outside India. That is the definition where we are considering that the goods are being exported out of India, since these are tangible in nature. However, in cases of services, the supplier, since these are intangible in nature, it has lot of conditions attached to it. Like the supplier is located in, should be in India. The recipient should be located outside India. The place of supply of such service should be falling outside India, and the payment must be received in foreign currency exchange or in INR wherever it is permitted by RBI. And the last condition is that both the persons should not be distinct person as defined in the explanations of one of section 8. That is basically where the branch office or liaison office is there of foreign company, that will be considered as the distinct persons over here, and that will not be considered as export of service. So whenever you export, there are refund routes for the exports which can be utilized for with payment of method and the without payment of method. In cases of with payment, uh, the taxes which you have paid on your outward, you can get it as a refund. In cases of export of goods, it is very simple to get the refund of with payment of taxes. You just have to pay the taxes. You just have to file the return. The data will be moved from the GST portal to the iSkate, and the data will be transmitted. You can get it as a refund in your bank account. Why, if all the details are matched accordingly. However, in cases of services, uh, you have to follow the normal route, that you have to file the refund application. It will be acknowledged. If any show cause notice is issued, then you have to reply to the show cause notice, and accordingly, that can be done. So, in cases of with payment, you can in cases of with payment, you can file for the refund, and accordingly, you can get a refund of capital goods as well. In cases of without payment, there is a drawback that you cannot claim the refund of capital goods. You can claim the refund only of input and input services. You cannot claim the refund of capital goods. So that is a difference between when you are going for with payment and without payment. But in without payment, you do not have to pay taxes. You do not have, there is no impact on cash flow. You can just accumulate the input tax credit and get it as a refund. Uh, so these are the two differences. Now I have classified some of the transactions of cross-border of holding and subsidiary companies, like major transactions which are there in holding and subsidiary companies when there is a related party, where there is a challenges. Some of the challenges are related to place of supply. Some of the common services are like IT designing, development services, back-end support services, subcontracting or marketing service, or management or testing services, or R&D. These are some of the major services which are being provided by in the cross-border arrangements. There is issues with related to place of supply in these transactions, which we'll be discussing in the second part of our session. So, in cases of convertible foreign exchange, when we are discussing convertible foreign exchange, whenever we are exporting to Nepal and Bhutan, it is the INR is permitted. However, in cases of Vostro account, if any INR payment is received in Vostro account, that is permitted by RBI. So that is also allowed, and it have been further clarified in the circular as well. In cases of settlement of exports of invoice, wherever there is an export of service and with payment of taxes, and or without payment of taxes, wherever you have exported basically the service and imported the service, you can settle the exports payment with the import payment, or it since it is allowed by FEMA. But that is an open-ended question. There are two views to it, that whether it could be settled, or since the converted foreign exchange should be received. So that is the point that I will leave it over here. In cases of distinct person, now wherever there is a branch office uh, and of a head office of the foreign company, or a liaison office of a foreign company, if a branch office is providing any service to its head office of the foreign company, in that cases that shall not be considered as an export, but it will be considered as exempt, that have been exempted. uh, there are many times department also issue notices with related to holding and subsidiary relationships, that it is not considered a separate legal entity. So they consider it sometimes that this is the same person, same company, so they do not consider it as a separate legal entity. However, it have been clarified many times that it is not a condition to the export of service, and accordingly it have also been clarified in the circulars as well. Now, in cases of export of goods, If you will see export of goods, we there are several type of transactions like drop shipping or high sea sales, where the basically, since it has not crossed the custom barriers, it will not be considered as under GST, and it have been covered under Schedule 3 of the GST supply. So accordingly, there will be no GST and there will be no supply on the same. However, whether reversal of common input tax credit is required, it is not required because it is not an exempt goods or services. But in cases of inbound sales, where you have imported the products, the goods are lying in the custom bonded warehouse, and then there is a transfer or sale. In such cases, there is no GST levy, but the reversal of input tax credit is still required because it is considered as exempt for the purpose of reversal of input tax credit. Now, if we consider the import of services. In cases of import of services, the valuation of supply in cases of related persons, that is the open market value. When you are valuing the related parties in cases of related party of import of services, you can consider it as the open market value. It should be, if the open market value is not available, you can consider it like quantity and quality. However, if the value cannot be determined under previous rules, it should be 110% of the cost of production or manufacture of goods. If it is not determined by the above rules provisions, it should be as the reasonable means of Section 15. The valuation should be done. Optional valuation method is also available, that if the supplier may opt to 90% of the price charge to the recipient of the same quality of like quantity of goods with the unrelated parties when we are dealing, and the goods are intended for further supply. However, there is an exception to all these rules, and the open market value shall be considered as the declared invoice value. Whatever we have declared in the invoice, that shall be considered as an open market value in cases of related party, provided the 100% ITC is available to the recipient. Now, in this case, even if we are considering a nil value as the open market value, that shall also be considered provided the full ITC is available. So this have been further clarified in the circular as well, that if you have not issued any invoice, if you have not declared that, then the value can be considered as nil as well in the same. So that is a very welcome move by the government of India, where in cases where there is full ITC available, uh, like in secondment and many other cases like the branch transfer. In cases of enforcers, like the issues were raised that the branch office have not raised the invoices, and there is an import of service provided by the branch office to the head office in enforcers, and accordingly such services were considered. The demand were in several crores, and the enforcers have replied with the same circular, with the same response, that the market value shall be considered as, if the full ITC is available, it shall be considered as deemed value, whatever the value is declared in the invoice. And since the value, the invoice have to be declared as self-declared invoice, the value shall be nil on the invoice. So no invoice is also required in the same. So now let's discuss the issues related to place of supply. So I have tried to connected the issues with the cross-border transactions as well. So what if we have paid wrong taxes? That could lead to several significant issues like mandatory. If we have paid the wrong taxes, let's say instead of CGST and SGST, we have paid the IGST, there is no mechanism to adjust the taxes between interstate and interstate. So first is that the taxpayer need to pay the correct taxes, then only he can claim the refund. There is no facility for relocation, so you have to pay the taxes again. So there is a cash burden. However, the relief is that you do not have to pay the interest, but still the taxes need to be paid, and then only you can get it as a refund. But in cases, the key issue regarding the refund of taxes paid under wrong head. So whether the important question is that under the section was that whether it can be considered by only that whenever you get to know that the wrong taxes have been paid, it should be only considered by the authorities, that appellate authority, adjudicating authority, that you have paid the wrong taxes, only then you can have to pay the correct taxes and get it as a refund. Or when you have identified yourself that you have paid the wrong taxes, you can just pay the taxes and get it as a refund. So in this case, both are applicable. So if you have also identified that you have paid the wrong taxes, you can get it as a refund by paying the correct taxes and apply for the taxes which have been paid wrongly. Now, the issues related to place of supply, major issue in place of supply, I would consider is the intermediary issue, because when we are filing for the refund, department always try to contend that whether it is a intermediary service or it will be considered in the services provided in respect of goods which are physically available. So these are the two major issues where the situation revolves around in place of supply. So I have tried to cover these topics with related to in place of supply issues, since it's a 20-minute session. So I have covered the issues, mainly main issues which are there in place of supply. So first is intermediary. What is intermediary? Intermediary is basically a person who is arranging or facilitating the supply of good or service, and he is not providing the service on his own account. The place of supply of that service shall be the location of such service, wherever the location of supply, basically. So that means that if I'm registered in Delhi, I have to pay the place of supply shall be Delhi, because I am located in Delhi. The place of supply shall also be Delhi if I am providing an intermediary service. Now, in cases of intermediary, because like we have discussed that subcontracting or broker, or there is a marketing service or advertising services, or the business support service. In all of these cases, general specific cases where the department many times contend that this is an intermediary service, and sometimes there are very thin lines in the cases that it is considered as intermediary service, it may be considered. So that's why the government of India have issued the circular, where it have clarified that in such service, at least there should be three persons involved. That is, two principal and one is the facilitated. No, minimum three parties must be involved. And there are two distinct supplies. One is the main supply of goods and service, and one is the facilitation. So one person is facilitating these transactions, and the two persons are transacting between goods and service. There is no principal to principal involved. There is no supply on its own account. Subcontracting is also not considered as the intermediary services. Now, another main question was there, in case intermediary is services there. In such cases, whether IGST is required to be paid, or CGST and SGST is required to be paid. Now, section with the conjoint reading of section 8, subsection 2, and section 5, 7, section 7 of subsection 5. It is required that IGST is required to be levied, even though I am registered in Delhi. I have my place of supply is also Delhi, but instead of CGST and SGST, I have to pay the IGST in such cases with place of supply as Delhi. The technical challenges with GSTR 1, that is a different thing. It have been further clarified in the High Court judgments as well. Now, there are several jurisprudence with respect to intermediary services as well, like wherever the subsidiary company is providing a service on to the holding company's customer. The department have contended that such service shall be considered as intermediary service, because he is not providing the service on his own account. He is providing the service to the customer's customer. So in that cases, he's arranging the facilities, and the court have held that in such cases that it will be considered as the service is provided on its own account, and it is provided on the behalf of, even if it is provided on the behalf of group of companies. It was held in Ernst and Young addition versus additional commissioner. Second case was there in an important case, that was that wherever the sales and marketing supports were there, so department have contended that these services were basically to arrange, because this is a marketing service, so basically they are arranging these services to the particular customer. But in such cases also, since these services were provided on principal to principal and there are only two parties involved, so accordingly it cannot be considered that the sales and marketing service can be considered as a
We lost your voice, Mr. Ikesh. Mr. Ikesh Nathan?
I think he's logged out. Yeah.
Uh, Maybe there is some network issue. We wait for 1 or 2 minutes, and otherwise we start with our next speaker.
I think there was some disconnection between the network. Sorry for the trouble.
Yes, please continue.
If my screen is visible,
Now it's visible.
okay. So sorry for the trouble. I think there was some network issue. Really apologies for that. So we were discussing about the pre-sales and post-sales customer service, where Amazon have provided the customer support service from the initial stage till the post-sales customer service. And in such cases also, that it was considered that even though the customers were supported from the initial stage till the end, but it will not be considered as intermediary service, because it is a service on principal to principal basis. So that is very important, that three parties must be involved, and accordingly one is the principal to principal and the second service is facilitation service, and over here it is not a facilitation, it is a principal to principal service which is provided on its own account. Similarly, there was a buying support service, that where the buyers were supported, and it will be considered as not an intermediary service. So Let's move to the performance-based services. That is wherever the service is provided. Next issue is basically related to place of supply, where goods are involved and any services provided in respect of goods. So it is the place of supply is where the service is actually performed. But lot of times, wherever the service is provided with respect to goods, department contends that these services provided with respect to goods, and it will not be considered as a place of supply outside India. It will be considered within India because it is provided where the services are actually performed. Now this is yet to be seen. There are several litigations with respect to the same, and that we'll explore. So accordingly, first proviso, however, that is that wherever you are providing a remote e-service from a remote location, that let's say a customer is sitting in US and I am through my internet or Teams, I just provide a service and rectify his situation of the technical issues. So in such cases, wherever the goods are located, that is the US. So in such cases, it will be considered as US, and the goods are located in US. So a place of supply shall fall outside India. Now the second proviso is that where the goods are temporarily imported into India, and for a job work, or there was a recent amendment was also there that any treatment or process with respect to that without being put to use, if the goods are temporarily imported, repaired and sent outside India, so that will be considered as location of supplier.
Mr. Nakal, we again lost you, and I and your time is already is covered by you, which is allotted to you. So now I would like to request Mr. Rajiv Agarwal, from partner from the Gravitas Legal, for continue the session and start his PPT. Good afternoon, sir.
Good afternoon, Akshat. Yeah. Anshu, you can please start. Akshat, I'm completely audible.
Yes, sir, you are perfectly audible and visible.
Thanks, thanks. Anshu, we are not able to see it. Yeah. Thanks, Akshat, for giving us this opportunity. I am a partner of Gravitas Legal and was a previous additional standing counsel with Government of NCT of Delhi and handled around 1,200 to 1,500 cases on behalf of the Department of Trade and Taxes. So I will carry forward the discussions taken by Ikesh. Sorry, Ikesh, your session has to end because of some connectivity. So I'm taken a topic which is a backbone, or we can say the soul of the GST. That is the input tax credit. So how I will explain how what is the ITC, which is the backbone of the GST, because everything is a revolve around in that is for we are working for ITC, which is used by ITC, which we are purchasing. So Anshu, can you have the slides, please? Yeah. So there are two types of purchases which generally a dealer makes, that is the goods and the services. So which are defined in section 2, subclause 59 of the Central Goods and Service Tax Act, and subclause 2 and subclause 60. So input defines input words, specifically deals with the goods, and where the services are mentioned that are specified in input services. So that concept uh, basically is in consonance. If you why it is so important to refer differently to input and input services, because in the sections of the refunds, that is section 54 of the CGST, there the words is mentioned input, which has been clarified by the Supreme Court in the VKC Footcare judgment, that you can take refund with respect to only input on the goods, not input services. So that's why I am emphasizing on these two subclauses, two subclause 59, that is input, which is with respect to goods, and two subclause 60 with input services. So with respect to purchases on goods and services, what you get is input tax credit, which is defined in can I have the next slide, please? Uh, subclause 262. So as per subclause 262, input tax in relation to registered person means a central tax, state tax, and integrated tax, and or union territory tax charged on any supply of goods or services or both made. So input tax includes both, and it includes both central tax, state tax, IGST, and union tax. So an input tax credit is defined in subclause section 2, subclause 63, which means credit of input tax. First input services, then input tax, then input tax credit. That is subclause 2, subclause 63. It has been defined, and output tax has been defined under section 2, subclause 82, which you can charge from on your outward supplies. So the most important question is an important section of the whole GST is section 16, which defines who is eligible for availing input tax credit. Can you have the slide, please, Anshu? Who is eligible for availing? Yeah. So as per section 16, subclause 1, every registered person shall be subject to such condition as prescribed and mentioned in section 14 and be entitled to take credit of input tax charge on any supply of goods or services or bought to him, which are used or intended to be used in the course of furtherance of his business, and said amount shall be credited to electronic credit ledger of the such person. So there are two ledgers which are maintained, electronic cash ledger and electronic credit ledger. So ITC is credited in your electronic credit ledger. So it includes both, but we have to emphasize on the words which are used by the legislature, that which are used or intended to be used in the course of furtherance of his business. So not for any purchases for the personal expenses which are mentioned in the block credit in section 17. That is not your eligible ITC. Eligible ITC has to satisfy each and every condition as specified in section 16. So for that purpose, I have made some chart. So input tax credit, major principle, what are those? Allow credit, it allows credit on taxes paid on all purchasing intended for further sale. Secondly, allow credit of taxes paid on all other business expenses. Thirdly, personal expenses are not creditable. Fourthly, it should be used or intended to be used in the course of furtherance of the business. These are the four major conditions which has been defined in section 16. So for that purpose, I will refer to again to section 16.2. Can I have the next slide, Sanshu? Yes. So section 16.2 provides that what are the four major conditions which a dealer has to maintain to avail the legible input tax credit. So for that purpose, I will not read the entire section. I will tell in brief that four conditions are required. That a dealer should be in a possession of a tax invoice or a debit note against which he is claiming the ITC. Secondly, double A, section 16 to double has been introduced in 2022. The details of the invoice or debit notes has been furnished by the supplier in the statement of outward supplies. Means your supplier has to file his GSTR1, which should be reflected in your GSTR2B. So that is the major condition which has been specified. Thirdly, which is the most important condition which we as a professionals or as a businessman we should take care, that is 16.2B, that he has received the goods or services or both. So without the receipt of the goods or services, there is you can't have the valid ITC unless until you receive me. It means what we are nowadays following or seeing, that many goodless invoices who are goods and services have been used by the unscrupulous persons while giving ITC to the persons. So which is not permissible. You should have the valid, you should have the receive the goods and services or both. And next slide, please. Thirdly, C, subject to provision of Section 41, a tax charge in respect of such supply has actually been paid to the government, either in cash or through utilization of income tax credit admission in the respect of said supplies. So this condition we have to check. So generally question arises how we can have the confirmation whether the person from we are purchasing the goods has actually paid to the government either in cash or through his electronic credit ledger. So this is something which is still under deliberation. There is no final judgment either by any High Court or Supreme Court on this uh, to make it a concrete issue. How this has to be ensured by a purchasing dealer, that is supplier pays the government the legitimate tax so that he can take the valid credit. So under the VAT regime or earlier sale tax regime, there are a number of judgments which says only you have to show your bona fide that you are a genuine purchaser with valid receipt of goods and services, and you should have paid the amount to the your supplier. But it is under still derivation. Fourth condition which has to be maintained is D, that you have to furnish your return under Section 39. So ultimately, four condition you have to satisfy for your valid ITC. So important points to keep in mind while availing the ITC, that try maintaining a system wherein communication with the supplier is maintained as a proof. Generally, question arises that I have taken 2-3 years back the goods and services from a supplier. Now I have no contact with the supplier, and the question arises that your supplier's registration has been cancelled due to non-existence or due to any other reason, but your conditions are fulfilled. Like a dealer's conditions are fulfilled, like I have the invoice, I have received the goods, I have made the payment to the my supplier, and further the goods which or services goods which I have taken I have further supplied to my dealers or to my purchasers. So you have all the proofs, but the fault is on the part of your supplier. Either he is found to be non-existence, or there is some doubt raised by the department on his credibility that whether he is a genuine supplier of the goods or not. So my suggestion is to maintain a system where communication with the supplier is maintained as a proof, like a WhatsApp chat, like email correspondence, like the exchange of purchase orders, and so that you can show that there was a proper uh, mechanism or business practice I have followed while purchasing the goods from a supplier which was genuine at the time when I purchased the goods. Secondly, maintain inward and outward registers for tracking of the vehicles carrying the goods, and also a system of gate pass, so which is very essential to show that you have received the goods to satisfy the second condition, that there was a proper receipt of the goods and services. Thirdly, for that purpose, you can have the picture while unloading and loading of the goods. Supplier can also give the toll tax receipts, the weighing bridges receipts that we called kata parchi, dharam kata. These all you have to maintain to show the valid receipt of the goods. Um, this is technical, which we are must all must aware. What is the time limit for claiming the ITC? So I am not on that. Can you have the next slide, please? So this is valid point. How the apportionment of the credit on ITC and input services under the GST law. As per Section 17, when goods and services of both are used for the registered person, partly for the purpose of any business and partly for other purpose, the amount of credit shall be restricted to the purpose of his business. As I mentioned in the subclause 16, subclause 1, that intended for the business purposes. If your purchases and sales are only for the business purpose, then you have full right to avail full ITC on your purchases and to adjust your supplies. However, if you are doing exempted sale, you are doing for the non-business purposes, any purchases or sales. So that portion of the your ITC is not available for you to be eligible for either refund or for adjustment purposes. So that is called apportionment of the credit on ITC and IT services under the GST law, which is defined in section 17(1). Can you the next slide, Anshu? Another important concept of ITC, because when you are getting 100, paying 100 rupees towards your ITC, so what you will not get, which is defined in section 17(1). And the section 17 says the portion, if you are not using for your business purpose or for the exempted sale, that is not eligible. Section 17(5) defines the block concept of black credit. It says, just that ITC, which is used for purchase of motor vehicles and other conveyances in general, except when used for business purposes, is not available. Any supplies made to non-registered taxable person is not available to use the ITC. Depreciated components on the capital goods is not available. Supplies, beverages, catering, etc., except when used for your similar outward supply is not eligible for adjustment. Rent a cab, life, health insurance, except government notified. So these services and travel benefit extended to employees. So if you have made payments toward these expenses, these are all block credits and not your valid ITC. So which is in furtherance of works contract further defined. So these are all categories we should take care while making purchases of them from your registered entity. And we should take care that these are the categories towards if we are making payments towards them or we are purchasing these goods and services, taking these services. So input tax credit is not available for, with respect to these purchases or services. So the list is exhausted, so I'm not reading in detail those goods and services. Like most important, the goods or services are both used for personal consumption. So generally, if we are doing business and we are purchasing laptop for our families or regular mobile phone purchases, any washing machine, fridge, if that are used only for the business purpose, then you can take the valid ITC towards said purchases. Otherwise, you can't adjust those ITC. Anshu, can have the next slide of the payment of taxes. So, how your valid ITC now can be utilized? There are two types of you are maintaining the ledgers. Electronic cash ledger, that is your cash ledger, which you are paid by the cash. And the most important is electronic credit ledger. So from the electronic cash ledger, you can make payment to everything like tax, interest, penalty, arrears, fees, or any other amount payable under the Act. However, from the electronic credit ledger, there are restrictions. From the IGST, you can use IGST tax can be used for the payment of IGST, CGST, and SGST both. CGST can be used only for the CGST and IGST. SGST can be used only for the payment of IGST and IGST. And union goods and used only for the payment of union goods and service tax and integrated goods and service tax. However, please be noted that liability to be discharged on reverse charge basis can only be discharged from the electronic cash ledger, not from the electronic credit ledger. So, to sum up the concept of ITC, my only opinion is to comply with Section 16. Take care that all your business practices is followed. Your stock register, your proof regarding your communication with the supplier, proof regarding your receipts of the goods, toll tax, email, WhatsApp chat, EVA bills, tax invoices, all are maintained in form, so that if any inquiry comes regarding after the doubt on your supplier, you can satisfy the your department on that. So thank you, because it is, I think, Akshat. Yeah.
Yes, sir.
So on the ITC, it is the.
Okay.
Thanks for
Thank you.
giving me opportunity. Yeah,
Thank you very much
thanks.
for your detailed presentation, sir. Now I would like to invite Mr. Yogesh Gaba, Managing Partner of Gaba and Company.
Yeah, hi Akshat,
Yeah,
thank
hi,
you.
sir. Good afternoon.
Yeah, good afternoon.
Over to you, sir.
Yeah, I'll just share my screen. Akshat, is my screen
Yes,
visible?
sir. It's visible now.
Yeah, okay, great. I'll discuss certain practical issues and litigious issues under GST, which is going on and is very important for industry at large. So the very first point is toll receipt as proof of movement. So recently, this has been the case with the DGGI. So we are facing one DGGI investigation in one of our clients' case in Siliguri. So Siliguri is the branch where DGGI has started this investigation. So DGGI is saying that the invoice on which you have moved goods from Siliguri to, let's say, UP, uh, the e-way bill showed that a particular vehicle number was involved, and on the checking of FASTag on that vehicle number, it was noticed that during the period, during the days of movement, there was no debit entry at these particular points, and therefore this truck was not moved at all, and this is merely a bogus invoice, and therefore you are ineligible for the input tax credit because you received there was no supply. There was this invoice was issued without supply actually. So this was the investigation, and this all scheme started when the Karnataka under the Karnataka VAT laws, the Supreme Court has stated that presence of toll receipt is one of the key document to prove that there was actual receipt of good. So the case was Ecom Gill, where the Supreme Court actually mentioned this. So I believe that there are multiple litigation which will start after this investigation. With respect to the current litigation which we are following is the Allahabad High Court decision. So there are two Allahabad High Court decision. One is Malik Trader and one is Astol Cleantech Private Limited. So Malik Trader decision of Allahabad High Court stated that since no proof of freight, toll receipt or payment thereof has been provided, the actual movement of goods cannot be established. And therefore, the recipient is not eligible for the input tax credit. The Astol Cleantech, which is again the Allahabad High Court decision, stated that so far as the absence of toll receipt is concerned, the transaction relates to year 2018 when every highway did not have a toll plaza and alternate routes were available. So the key points to be considered here is that whether there is a requirement of toll receipts under GST to prove the movement of goods, whether during the coverage of the distance, in the coverage of the distance, was there alternative routes available, and then there is a provision under GST law, which is section 155, talks about that the eligibility of input tax credit. When a taxpayer says that I am eligible for the input tax credit, the onus of proving the eligibility lies on the taxpayer itself. So therefore, the taxpayer, the recipient has to prove that goods were received by him. If he is unable to prove that the goods were received by him, he would not be able to claim the input tax credit. However, as far as, so there are two different type of show cause notices. One is that the department is issuing the show cause notice alleging that you have not received the goods. The other sort of litigation which the DGGI is invoking is that there was no movement involved. So as far as the allegation that you have not received the goods, and because you do not have the toll receipt, therefore it will not be treated as you have received the goods. I think taxpayer may have good merits on this point, but when the allegation comes that there was no movement involved and it is a fake invoicing case, then usually the taxpayer is at the back end unless he proves through the toll receipts or he proves that there was alternative route available, there was no requirement of the toll on the distance within that distance. So there are two different type of litigation. The transaction can be same, but the allegations are different. One allegation, section 2 clause, section 2 subsection, section 16 subsection 2 condition, and one is fake invoicing, which is the offenses and prosecution clause. The other point which is to be considered is that while the onus to prove goods were actually received was on the taxpayer, however, the onus to prove the non-movement of goods should lie with the revenue, because 155 does not talk about the onus of proving the movement of goods when the allegation is with respect to fake invoicing. In this case, the revenue has the onus to prove that it was a fake invoicing. Another point is that it is quite impossible for the recipient to rely on the transporter every time, that he will always take a proper route by payment of toll. He won't take a route which is a muddy route to avoid those toll taxes and all. Another litigative area is supplier default in payment of tax. Now I'm not going into the details. I think it has already been covered by the previous session into the law and everything, but I'll just give you one advice. Before that, I would like to discuss the two Allahabad High Court decisions which came within the span of 5 days. On 26th May 2025, the Allahabad High Court in Tranship Online Services stated that recipient is not eligible for input tax credit on supplier's default in payment of tax. That means if supplier is defaulting, even if the government has not received the taxes, it should first proceed with the supplier and recipient should not bear the brunt. 5 days later, the RT Infotech Allahabad High Court stated that on 30th May, purchaser cannot be deprived of ITC due to supplier's default in payment of tax. Now, both are contradictory decisions. Both are both are interpreting condition of section 16 to C in a different manner. Of course, the facts were different. There were some evidence involved, and in one case, evidences were not available. But the interpretation which the Allahabad High Court, and both were actually rendered by different judges. So it is creating a confusion. My advice to the taxpayer is that do not blindly rely on these decisions to say that, okay, we will see in the courts. Just built in strong internal control systems to have the checks on the vendors, and built in a system where you have taken declarations, you are checking it quarterly about their compliances. The portal clearly states that there is a clear percentage being shown between 3B and GSTR1. Have a proper mechanism of GST reconciliation on monthly basis. And even after all these things, the supplier is not paying the taxes, take up the matter with the supplier under the contract laws and take up this input tax credit dispute to the higher courts. But do not blindly rely on these courts to say that, okay, we will see, whatever happens will happen. So that should not be the attitude. Just have a strong internal control to tackle these situations with the vendors. Another sort of litigation is with respect to place of supply errors by the suppliers. Now, the example is that the supplier has supplied you the services, let's say in Uttar Pradesh. The place of supply correctly mentioned on the invoice was Uttar Pradesh. However, at the time of uploading the invoice on the GSTR1 portal, the supplier mistakenly mentioned it as Haryana. So in Uttar Pradesh jurisdiction, when your assessment happens, the department will actually deny the input tax credit because the place of supply was mentioned as Haryana instead of Uttar Pradesh. The logic behind that denial is that the Uttar Pradesh department is saying that we have not received the GST allocated to this supply because in terms of section 17 of the IGST Act, which deals with the allocation of revenue, the Haryana government will get this revenue because the place of supply was mentioned as Haryana. Okay. What is the argument against this? So there is a circular which talks about a scenario where the supplier has filed form GSTR 13B, but he has declared the supply with wrong GSTN. The government clarified that in this case, the two jurisdictions should communicate with each other and the ITC should not be denied to the recipient. We explained to the department that mentioning wrong GSTN and mentioning wrong POS has the same implication. And therefore, this circular, which is 183 popular circular, should also apply. This particular clarification should also apply to the POS cases also. And we have got the favorable decision at the first appellate stage, not at the department stage. The first appellate stage actually accepted the argument that the clarification for wrong GSTN in the GSTR 1 should apply to the wrong POS cases also, because the ultimate result is the same. Next is the requirement of claiming the input tax credit. So there are a lot of litigation going on that whether, so you have imported certain goods and you have paid IGST at 12%. It was required to be paid under 18% rate. This is one scenario. Other scenario is EPCG redemption cases, advance authorization cases, where you have not fulfilled the export obligations and now you have to pay the import duties, including IGST. And you have paid it through TR6 challan or GAR7 challan, or nowadays it is being paid online at the ISGate portal. So question is, are those challans, payment challans, sufficient document to avail the input tax credit? If you see the rule 37, it talks about the input tax credit shall be availed by a registered person, including the ISD, on the basis of following document mentioned as for the import, a bill of entry and any similar document prescribed under Customs Act for the assessment of integrated tax on imports. So basically they are saying the assessment documents. Bill of entry is self-assessment. Then there is 17(4) and 5, which talks about post facto assessments. 149 is amendment of those self-assessment. 154 is again amendment of those self-assessment. So these assessment documents are considered as the relevant document for availing the input tax credit. But TR6 challan or the online challans are not prescribed as the valid document. Recently, the Madras High Court has accepted the writ petition and issued notice to the department on the question whether TR6 challan is a valid document or not. In our view, it seems that since there is a clear indication that TR6 challan is not a valid document, I would suggest that when you are paying custom duty, of course, in the High Court, you can always argue that I have paid the custom duty and therefore, due to procedural lapses, I should not be deprived of input tax credit, and the courts may grant you a relief in this regard. But as a precautionary measure, when you are making a payment of any custom duty, additional custom duty, other than your self-assessed tax, it is always better to get your bill of entry reassessed. And after your bill of entry is getting reassessed, either you will have a speaking order separately, or you will have a reassessed bill of entry itself. On that basis, you can very well avail the input tax credit. So be like cautious of this fact to get the reassessment done. For reassessment, you have these options: Amendment 149, 154, and 174 under the Customs Act. ITC on advance payment. Now we will link this TR6 with this case. So L&T IHI Consortium, Bombay High Court decision. So it's the question of law was whether ITC is eligible by the when GST is charged by supplier on advance payment. So 16.2 says that you must have received the goods or services. So department contended that they have not fulfilled the condition of receipt of service. It is merely an advance. Therefore, receipt of service is not yet crystallized, and thus they cannot avail the input tax credit. The High Court actually, analyzed the expression supply, which says agreed to be made. That means the supply would also include a situation where a supply is agreed to be made. And therefore, the High Court stated that at one stage you cannot say that advance will be treated as supply because the agreed to be made expression is there, and at the same stage you cannot say that they have not received the supply. When you are saying the supply is made, the taxable event has been extracted, therefore the supply has also been received. How it is possible that the supply is made but supply is not received? So the High Court actually gone into this interpretation. The other thing which I personally, uh, uh, obviously we are relying on this decision to dispute our cases, but I personally do not believe that it has a very huge strength in this argument, which the High Court stated that receipt voucher is a tax paying document. And because it is a tax paying document, even though it is not prescribed under Rule 36, ITC should be considered on the basis of this document. I personally feel that it is not a very like an argument to say that a receipt voucher should be treated as a document for input tax credit, because if receipt voucher is treated, TR6 is also a tax paying document. Then on the basis of this decision, you can also argue that TR6, since it is a tax-paying document, the input tax credit should be eligible. So for TR6 dispute, you can take the benefit of LNTI, this Bombay High Court decision. But yeah, I personally believe that it does not have a very huge merit, with all due respect to the Honorable High Court. Reavailment of permanent reversal. So this is the case we have actually handled. So there are in the 3B, there are two ITC reversed scenarios. One is as per Rule 38, 42, 43 and 17.5, which the department says it is called permanent reversal, and then the others. So one of our clients have made a permanent reversal in 4B1 and then reavailed after some time because we found out that they have wrongly reversed this credit as permanent reversal. This was actually eligible credit. We got it reavailed, and the department stated that this is a permanent credit. Once you have reversed it, you cannot reavail this credit on the basis of this circular. The circular 170 says that registered person will report the reversal of ITC which are absolute in nature and cannot be reclaimed, such as 30, 38, 42, 43 and 17.5. Registered person will report the reversal of ITC which are not permanent in nature and can be reclaimed in future in 4B2. So 4B1 circular says it's permanent in nature, cannot be reclaimed. 4B2 can be reclaimed. However, we pointed out to the department that Rule 42, which you are saying is permanent in nature, cannot be reclaimed, is factually and legally incorrect. In fact, the Rule 42 itself says that you first reverse the credit on the basis of your monthly calculation, and if you found at the year end that it is reversed in excess, you can reclaim the credit between April to September for a particular financial year. Okay, that means your circular in fact, is going ultra wires to Rule 42 itself, saying Rule 42 is a credit which cannot be reclaimed. So therefore, the circular is not valid in terms of creating this distinction of permanent, absolute reversal and temporary reversals. There is no concept of absolute or temporary reversals. It has been created by a circular, which is again ultra wires to the very GST law. So you can very well reclaim the credit if you have earlier reversed it under the permanent head. The next point is if you have ITC accumulations in your company. So there are 5 solutions to ITC accumulation. If you have 2 businesses, you can combine those GSTN, lower rate and higher rate, routing outward supply through different GSTNs. If one is paying cash and one is paying, GST through ITC, you can manage your outward supply through your GSTNs by way of bill to ship to transactions. Similarly, if you have been receiving excess ITC in one branch and no excess IT and lower ITC in other branch, you can again route it through bill to ship to transactions. Again, you can also plan this route through the import of goods, mentioning different GSTN or bill of entry depending on how the accumulation is being done on different GSTNs. Instead of paying under LUT, you can opt for with payment of IGST in case of exports. It will liquidate your input tax credit because there are multiple reasons to that. One is that capital goods under LUT, you won't get the input tax credit of capital goods converted into your refund, but under with payment of tax, you can get capital goods ITC being converted into your refund, cash refund. Another is a mover scheme, which is bonded manufacturing. If you won't avail this scheme, you'll have to pay IGST, which will get accumulated. If you and your business is, will start generating cash after 2-3 years. So first you can avail the mover. Once your business is generating cash, then you can debond your goods. So that is another way of liquidating your accumulated input tax credit. Time limit to avail ITC in your import of goods is another litigative area. In our view, yes, 16(4) time limit of November applies to ITC on import of goods as well. There are opinions in the consultation world or consultative world that section 16 does not prescribe bill of entry as the document. It only specify invoice or debit note. And therefore, section 16(4) time limit does not apply to bill of entry. However, that is not true. There is a specific mandate of apportionment of input tax credit under section 17 of IGST Act between state and center. And that particular provision specifically says that those ITC on import of goods, if a taxpayer has not availed within the specified period, then it will be allocated as a revenue to the states. That means section 17 is indicating that we have specified a time limit under the GST laws for availing the input tax credit on import of goods. And reading these two provisions simultaneously, we have to give a purposive construction. Reading it harmoniously will result in a situation where you have a time limit for availing the input tax credit on import of goods. Meaning of full ITC. So this is my last point, Akshat. I have taken, I think, 2-3 minutes or maybe 5 minutes more. But yeah, so this is my last point, which is very important. So Rule 28 of the CGST rule states that you can have any invoice value if the recipient is eligible for full input tax credit. Okay. Now the question is, what is full input tax credit? Department have also issued a circular that there can be nil value if the other party is eligible for full ITC. They have not explained the meaning of full ITC. Actually, the full ITC concept has been derived from the European VAT directives. And if you read those directive Article 80, Article 167, Article 169, you will come to a conclusion that even if you have a single rupee of ITC reversal on a particular transaction, even though it is a reversal of 40 to 43, then you do not have a right to full ITC. People have taken this interpretation that I have to see the input tax eligibility of input tax credit quo that particular supply. I agree with you. We have to take the interpretation qua the supply, not as a whole. However, there are particular supplies where you do not have a right to full ITC. For example, corporate guarantee. Okay. For example, import of services, trademark. You may have imported certain trademark and you are paying royalty, which is import of services. And every company have an investment in securities, shares, mutual funds. And as per Rule 42 read with section number 17, 2 and 3, 1% of the sale value of mutual fund shall be treated as exempt supply, and thereby there will be 95% of scenarios where the companies are having exempt supplies. Although some of the companies are missing this point that 1% of sale value of security shall be treated as exempt supply, therefore reversal are required. But at the same time, this scenario is also creating a situation where you will not have a full ITC on certain supplies. And therefore, you cannot opt any value when paying the GST. So this is a particular, peculiar situation with respect to those customer where they have these exempt supplies relating to a particular input tax credit where they do not have the right to full ITC and they are making any invoice, they are adopting any invoice value as the sacrosanct rule. So I believe this full ITC is going to be the interpretation of this term full ITC is going to be one of the most litigative area, and EU VAT will play a huge role in this because under EU VAT we have a full input tax credit. They use the expression right of deduction. So in the under the EU VAT, input tax credit is called right of deduction. So they use the expression full right of deduction. Okay. So if you read this article 80, where it says does not have a full right of deduction. So it is similar to full ITC. We have borrowed this concept of full ITC from EU VAT directive, our forefathers, GST forefathers actually. If you read those commentaries or reports how GST brought in, so they brought in this particular concept from the EU VAT. So this is it from my side. So thank you very much, Akshat and ISFA for inviting me over and sharing my insights on certain topics. Thanks.
Thank you very much for your presentation, sir. Please stay with us for the Q&A session, which we take up in the last of the session. Now, I would like to invite our next speaker, Mr. Jatin Arora, Advocate, Arora Law Offices. Sir, over to you.
Yeah, thank you, Akshat. Good afternoon, everyone. Akshat, you'll be putting up my presentation. I give it to you, or you want me to do it?
Sorry, you can run your presentation by your own, if
I
possible.
can, definitely. Okay, give me a minute then. Can you see my screen?
Yes, now it's visible.
Okay. All right. So the topic given to me is, dispute resolution under GST, and I would rather thank Yogesh to have already set up the tone for this topic by sharing his knowledge about the recent case laws and showing how the confusion and is prevailing under GST wherein the same High Court is probably giving two different judgments on the same issue. Of course, we do concede the point that every uh, uh, case has its own unique facts, but at least the law has to be applied uniformly across the disputes that are coming up. Now, what I am trying to cover under this presentation is how the dispute resolution mechanism is structured under the GST, and how we are looking at different issues which are pending under the GST, how the government is looking at this whole situation, and how from a future perspective, what we have to see, especially when we are in the eighth year of the GST, what should be the lookout from a dispute resolution perspective specifically from the ninth year onwards. Now, we know that there are a lot of disputes which are coming up. We know that the government has been proactive in the last 8 years, in timely clarifications being issued by the government, the proactive approach by the industry associations in highlighting the industry matters to the authorities, and they have an open door policy. They are listening to the industry. They are taking up the matters in GST Council, and from time to time, the government has been issuing clarifications to resolve larger industry issues. But whether those are percolated down properly to the at the ground level at the officers, whether they understand it correctly, whether they implement the real intention of the law and the legislature when they have issued those circulars and clarifications, and therefore are we still in a situation wherein despite ample clarity available on a particular issue, whether it is coming from the previous tax regimes, the knowledge which is we expect that the knowledge should have continued and percolated down in the GST regime, but somehow we feel that that is not used properly, or whether the intention of the legislature when they have framed the law in a particular way, or whether they have issued clarifications later on also, whether the officers are able to implement that properly. So those are the situations that we are facing under the dispute resolution under GST as on date. And these are certain situations that I'll be talking about. So moving on, if you look at how the dispute resolution mechanism is structured, under the GST law, what is the statutory situation available? Now we know that there are multiple checkpoints that are available with the authorities, with the officers under the GST law, by way of scrutiny of returns or carrying out audits or special audits, or by way of investigations which are being routinely conducted by whether the DGGI or Anti-Evasion wing of the commissioners. Uh, while it is okay to have these legislative provisions in place, because these definitely are required for the revenue authorities to have a check on whether the taxpayers are genuine, not genuine. We have seen there are multiple cases of frauds which are detected by the officers by way of for doing the scrutiny or audits or investigations. So these are required. It's not that these are not required or these are bad to have in the law. Problem is that when these becomes overwhelming for any taxpayer, in as much as the scrutiny is also conducted by the officer, the audits are also going on simultaneously for multiple years, and then we also face investigations from either Anti-Evasion or the DGGI on one specific issue related to those years on it's which are already under audit or scrutiny. The business impediment is something that the government needs to understand, that you start doing all these things together and also multiple times every year. If we are facing these situations, then it becomes a real challenge for the businesses to do the work properly. Their businesses exist to do the business, not to only provide information and documentation to the investigating officers or the jurisdictional officers. Despite the fact that we are in the GST after 8 years, having a remarkable and a very solid IT system in place, wherein everything is available to everyone online. Still, insistence by these officers separately to provide the information again and again to each one of them is something that becomes, quite a wastage of time and overwhelming for the businesses. So this is one thing that we do face, under the GST as on date. We have seen what are the issues that during the scrutiny and the audits and investigations people have pointed out. The authorities have majorly looked at the ITC mismatch for the previous years, for the first 2 3 years. The focus has always been in relation to the ITC mismatches. Again, ITC mismatch is not an issue, but the point is how they are looking at it. When we are looking at a particular situation in the ITC, we have seen, by Mr. Rajiv, how the ITC has to be availed and how it is shown in the returns. But the fact is that they do not understand this point that there can be a situation where a particular vendor's invoice can be availed in 3 months down the line or has already been reversed 4 or 5 months down the line within the same financial year. We have seen, mechanical notices being issued by the system or by the officers without proper application of the mind, and that has become kind of a nuisance for the businesses, over the years. Anti-profit ring investigations have also been, we have a lot of people have gone through it from the transition and from the various rate changes that have happened over the period. Anti-profit ring investigations we've seen have largely been conducted mechanically, wherein they have not appreciated any of the fact, they have not understood the logic behind it. They have just gone and kept on confirming every investigation that they have undertaken, and people had to waste a lot of time in going to the National Profiting Authority, wherein also the experience was not really good that, getting any favorable, order for the assessees. Largely, the orders were, confirmed by the authorities. And now the pending matters have gone to the Competition Commission. We're not seeing any different approach there also. Advanced rulings, we have seen in the past that advanced rulings have largely been, the experience initially, the understanding and expectation was that there will be a clarity which will be provided in time, but we have seen that in advanced rulings also, largely the experience has been on the negative side. The notices which have to be issued under the provisions to demand the recovery of tax or the ITC that has not been availed properly. We have seen how the notices has been issued in the initial years. They were largely issued to meet the timelines without any specific allegations being made, without any proper appreciation of the legal provisions and the facts. But then the notices were only issued that because there is a time limit which is given to issue the notices, and we are closing that. And we have actually seen certain notices wherein they have actually said this in writing. We have not done any assessment of any tax demand. We don't know what is the demand that we have to do. But you please provide these informations, and then we'll later on see whether there is a demand which fructifies or not. But because the timeline is approaching, and therefore the show cause notice is issued, and we have gone to the high courts and got those notices quashed. But then this was the funny situation that we have seen. Orders again, we adjudication orders largely have mechanically, confirmed the demands which are there in the notices. Appeals, we have had mixed experience, wherein the appellate authorities have seen that what is the fact and what is the reality of the situation. As we know, in the GST, in the appellate proceedings, the first appellate authority does not have a power to remand, and therefore they are required to look at the entire situation. Again, they must appreciate the entire fact of the case and then, modify, confirm, or reject the order. But we have largely seen that the confirmation of the demands have happened. In rare cases, in few of the cases, we have seen the modification, and some cases we have seen the rejection of the demands also. But then again, the percentages have differed, and the experience has largely been that the demands have already been confirmed, or the matters are still pending at the appellate stage. Because there is no timeline which is there at the appellate stage. There is only recommendation as far as possible, pass the order within 1 year. But then there's not a strict timeline which is applicable in case of show cause notices and adjudication orders. Due to this, we have seen a lot of delays which have happened in the refund cases specifically, and resulting into the blockage of the important working capital, and therefore larger impact on the businesses that we have seen. Again, the refunds point is that though the law very clearly says that if there is a delay in sanctioning the refund beyond 60 days from the date of filing of the original application, interest must be paid, and it is obligatory on the department to pay the interest. However, we have seen the litigation even on that point, wherein the department has tried to, somehow shove the responsibility by saying, oh, because you have come as a second application after the appeal, we have passed it, we've sanctioned the refund within 60 days, no interest is to be payable. We have, case laws on that also, and still there are in different jurisdictions, we are seeing the same kind of orders being passed by the appellate authorities or the refund sanctioning authorities saying that no, there is no delay because the second application is a fresh application, it's not a continuation. So there are, mixed experiences which we have had over the past 8 years. And because of that, there are various issues which are still pending for clarification. Despite the government issuing some clarifications on some of the matters, we still see that the demands are coming up. We still see that there is a confusion which is there within the industry or within the department in terms of how to tackle these issues. We are still, after 8 years, seeing Tran 1 issues pending at the appellate stage, wherein the major question is that the possession of invoice condition, which is there in the law, is interpreted in varied ways by the department officers, saying that it is not having your name, the name is not properly mentioned, the address is not properly mentioned, the date is not clearly visible, the copy is not legible, irrespective of the fact that the law was a beneficial legislation intended to allow the people to avail the credit, even if they do not have the invoice in their possession in terms of the explanation of the law. But still, we are seeing those issues. ISD and internal supplies cross-charge between the states has been an eternal issue since the day one. We have been discussing and debating on this. What is ISD? What is internal supplies? The government has issued a very a detailed clarification on that. But when they have used the term internal supplies in that, what do they mean by internal supplies? What is internal supply? No definition of that is there in GST. And again, that is left to the interpretation and understanding of revenue officers in terms of how they see what they see in that. Intermediary and exports, we've seen in the previous presentations, intermediary still is an issue. How to determine the place of supply, who is an intermediary is a bigger question. In the circular, there are few examples which are given, but then large area of business has been left out of the circular to be determined by the officers on a case-to-case basis. And again, we see same lack of understanding of the term. Specifically in view of the fact that still we have those experiences and learnings of the past service tax regime available with us in form of the judicial precedents, but people are not ready to look at that. One of the common answers that we get from the authorities as well as the first appellate authority in their orders is that those decisions are actually of the previous regime, service tax regime, not applicable to GST because GST is a new law, and which is very, very irritating and frustrating at times that when Supreme Court can, take guidance and learnings from its past judgments on different subjects, on different topics, not even on tax, why can't our officers accept the judgments of the same service tax regime, which has largely been subsumed and carried forward for the services in the GST law? But then that's the situation. Again, there are these multiple, situations and issues which are pending, composite and mixed supplies. What is the taxability? What is the tax rate? What is the classification? Post-supply discounts and subsidy given by the person who is providing the supply, the discounts to the recipient, how it has to be taxed. The valuation rule says that the subsidy given by the supplier to the recipient has to be taxed in the hands of the recipient. But what is the mechanism? What is the procedure? How it should be taxed in the hands of the recipient? Because if the recipient is supplying something purchased at 100 at 80 on the directions of the principal, then the invoice is raised for 80 rupees. And if there is a subsidy of 20 rupees, which is given by the principal to the agent to compensate the agent for any loss by way of commercial credit notes or by any other way, by way of replenishment or extra discounts, how do we call it as a subsidy? And even if somebody says that it is a subsidy, then how do we tax it in the hands of the recipient, which is the agent? Because the agent is going to raise the invoice of 80 rupees. No clarity on that point, but there are debates, there are discussions, investigations. all those things are going on. Officers do not have any understanding of that. They just go by the word written in the law that it has to be taxed in the hands of the recipient. But how it should happen, even they are clueless about it. So we are seeing all these problems. Government subsidy and inverted duty refunds is another issue which is going on, specifically in fertilizers, auto, different sectors. Urea, farmers, agriculture sector. Government says you have to provide this on subsidy. So the supplier provides it to the farmers at a subsidized rate. But when we go for the taxability, the state government says, sorry, the entire amount has to be subject to GST. If I'm doing an import, I pay the duty on the imported value, but I supply it to the farmers at a subsidized value. If there is an inversion which is happening, how do I go and take the refund? What is the denominator? What is the numerator that I have to take? The state governments apply their own mind. They do not look at the point that the central government subsidies are not to be included in the value for taxable purposes, but for inverted duty refunds, what is the denominator? What is the numerator? So that confusion is still going on. We have recently seen the objections taken by the authorities in terms of supply of donuts. I mean, everything, whether it is a paratha, samosa, or milk beverage with sugar, without sugar, with chocolate, without chocolate, aerated, non-aerated juices, fruit juices with aeration, without aeration. So many things are being taken up by the authorities on a daily basis in respect of the classification of the goods, as well as because there is a different rate of tax which is provided in the law. Transfer of leased land, or whether or not the recent issue of Karnataka Advanced Ruling Authority giving contradictory rulings in respect of ride-hailing apps. All these are there, but these are major issues that I have mentioned there. There are hundreds of other issues which are still pending in relation to the availment of ITC, reversal of ITC, etc., as Yogesh has highlighted in his presentation. The point here is that when we are in the, we have completed the 8 years of GST and we are in the 9th year, how do we handle all these things? Any growing economy needs a faster and an efficient dispute resolution mechanism, because disputes will keep on arising as we will go forward. There will be new areas which will emerge, like we are seeing today, the emergence of ESG, the VDAs, the drones, air taxes, carbon credits, GCCs. New areas, new business of aspects will keep on coming. New transactions will happen. Digital way of working will happen. How do we prepare ourselves? The first, I think, is a larger point is the change in the mindset of the authorities. I sometimes, joke around with the officers when I meet them that, one thing that you have not changed over the period is that somebody has started a business in India and taken a GST registration, you must be a criminal. Why have you taken the GST registration? So that mindset has to change. Authorities should start accepting that there are honest businessmen. There is something that while doing the business, somebody will somewhere do a mistake as we go along. That mistake can be corrected with a smaller penalty or without a smaller penalty is a different point. But then there will be some honest and bona fide interpretational aspect. There will be some bona fide and honest, transactional mistakes, some typing mistakes which will happen. That does not make every businessman a criminal. And that is what that people have to understand. In investigations, we do see this point that somebody starts an investigation for a particular point. The government has been giving this clarification time and again that investigations have to be specific, theme-based, subject-based, topic-based. And the summons that are issued, to call for the information should be very clear in terms of what is the investigation going on. It should not be a vague summon that I am conducting a GST inquiry in respect of GST inquiry. So you come and bring all the documents of the last 5 years to the extent whatever is or 6 years, 7 years, 8 years time period that has been covered in the investigation. But officers are continuing to do that. We still see those summons with the same vague point mentioned there. GST inquiry is being conducted by me in respect of GST inquiry. Even if you go and ask what is the main point that you are looking at, they will tell you what is the main point. They do the investigation, they see nothing wrong in the business. It becomes kind of an ego hurt situation, and then the investigation gets spreaded to the entire operations of the company with the view that something should be found out. How can we give the report to the seniors that there is nothing which is available? We could not find anything there. Now, I know I have, completed my time, but just one more minute that I'll take. And therefore, from a future perspective, change in the mindset is required, and for that, a continuous education has to be, given to the officers at the ground level, to people in the companies also, because a lot of times we have seen that the people who are actually doing the compliance or actually looking at the transactions, they also have a fixed mindset. They also approach the particular transaction or a situation basis their own understanding of that, which is based on some fixed nuances, some fixed situations or eventualities, or because they have heard something in one conference, they believe that is right. They do not ask the other people. So continuous education at both sides is very important. We should not, unlearn the past also. We should not keep on applying the past blindly also. We need to understand what exactly is the transaction, how the law is structured, what is that we have to do. And we need to ask people that, take periodic consultations in terms of what you're doing is right or wrong, and then prepare for the futures. The emerging areas which are there, if the government start looking at these areas, start doing consultative discussions with experts prior to the disputes coming into that becoming litigation, and then after 3 4 years issuing a clarification, that generally does not help. That's not a very good dispute resolution mechanism which is there. Every time you let the litigation become big, hundreds of show cause notices being issued, hundreds of writ petitions filed, and then you start doing the consultation, and then after that 3 4 years, GST Council comes up with a clarification that okay, to settle this, we are doing this. Today they are empowered. The government is empowered under Section 11A to say as is, where is basis. They can leave that. They have given that one good power to themselves. I would really appreciate the government thought about this, that we can kill a lot of litigation of the past by using this as is where is basis thing. But still, if we prepare ourselves well for the future and we start looking at what would be the possible dispute areas, and we start giving clarifications today itself, and start telling people in the department that how they have to approach all these things, how they have to be empathetic about the new areas being coming, there will definitely be bound to be some confusions that will come, but then how to handle that properly is something that we have to see. And then the taxpayer's responsibility, again, I don't see that it is only one-sided. An efficient dispute resolution mechanism in any country can work when both the sides work together. We, in our experience, have seen the knowledge not being transferred to the person who is going to take up the responsibility if the earlier person is outgoing, whether leaving the job or whether retiring. We have seen in our experience a lot of examples wherein once we start looking at the show cause notice or we are at the appeal stage, we ask for a particular information. The answer is, oh, sir, sorry, because the person who used to handle earlier is no more with us, and we are not able to trace the file. We are not able to trace the paper. We don't know how the return was prepared. We don't know what was the basis of this calculation or reversal. So that knowledge transfer, I think, also is something which is very important from a taxpayer perspective also. Because if you want officers to understand your thing properly, if you want them to be empathetic towards you, you need to give them the clear, detailed understanding of how things have happened. If you yourself are not clear, they have their, field day. They will do whatever they want. Now, of course, there's a lot of litigation which is pending. I'm not taking more time. GST tribunals are coming. I don't want to get into the numbers, but yeah, overall, last 8 years, things have improved a lot. As we always say, a lot has been done, a lot has to be still achieved. It is an evolution. It will continue to evolve. The situations will develop, and we'll continue to see how the whole situation will pan out before us in the coming days. So yeah, ready for that. Thank you very much, Akshat, for you.
Thank you very much for your presentation, sir. Now, I would request to all our speaker, please switch on your video so that we can start the Q&A session. And before taking any audience question, I would request to all our speaker, can you give us the two suggestion for the government on the 8 year of GST and two suggestion for the industry for the next year?
Well, I have just now
Jat-
given
yeah,
a
Jatin
couple
sir,
of
started from
suggestions
you.
as I have, as part of my last slide, I've given a couple of suggestions. So yeah, you want me to say something more? I'm
Yes,
happy,
sir, two
but
more
I
suggestion
think others can
means
do. speak.
two main point you highlighted for the government and for industry.
Yeah. So I think, one thing is very important that I have mentioned. Again, I'll repeat that, not to unlearn the past. When I say not to unlearn the past, it is not only the previous judgments which have been given by the courts by looking at them in a one-sided way, but also learnings that we have had in terms of how the law developed, what were the transactions, what were the basis, and how we are doing the business today, and how we are going forward. So that whole thing is very important for people to understand both sides again. And again, one thing that I would say is uh, the compliance landscape has largely evolved, for the simplification. We do keep on hearing this point that, oh, the GST compliance is very difficult, very difficult. I think those who had multiple state compliances earlier uh, were having much tougher compliances earlier. Today, it is relatively very simple that you have the same return for all the states and that too digital. System sometimes may behave in a particular way. Officers, how they interpret is a different way. But how the system is, that is very important. And therefore, we need to embrace the change. We need to be ready for any new thing that is coming because that is going to stay. That is how we will do. We may feel that something is not correct and therefore we go to the government may agree and withdraw that is a different thing, but always saying that no, it is not good. I think after 8 years we need to stop doing that and looking at the future. We need to start accepting that there is a different thing which is coming to our way.
Thank you, sir. Now, Yogesh sir, are you there?
Yes, I'm there.
Yeah, so sir,
So
same question with you also. Two recommendation for government and for two for industry.
yeah, I think for the industry, I would say that uh, prevention is better than cure. So have your internal control systems in place beforehand and have proper all checks and balances with respect to all the compliances under GST. Litigation, of course, will take its own course because department has targets, and therefore they will come one way or the other. They will find innovative ways to pull out money from you. But so it is imperative for you to have those internal control systems ready with you. And for the government, I would say that to make litigation free environment, one in a way that so for example, we have a dispute of vendor payments. Okay, so these days taxpayers are saying that if our vendors are not paying, we are not going to close our shop with those vendors. So is there any mechanism where a recipient can also pay tax under RCM and avail the input tax credit for the normal supplies as well? So if I want to do compliances myself for my supplier also, rather than dependent on the supplier, I pay tax to the government myself and I'll avail the input tax credit. Why should I rely on the supplier? So if this sort of RCM concept can come in normal supply also, that would be great. I think this was a proposition before GST Council. I think it was a very small agenda. They have not discussed it. But yeah, I think one day if these litigation will continue, RCM will be there for normal supplies also. So I think this is my suggestion.
Thank you very much. Ikesh sir, 2 points for government and two for industry.
So, I think that for the government, it would be better that the HSN or something, the data driven should be brought in place that so that it helps the industry bringing the compliance in a better way where we can use the AI and the technologies to file the returns in a better way and do the compliance in a better way. Similarly, for the industry also, I feel that we need to go be data driven. We have to use the technologies. We have to bring in the softwares. We have to bring in the details so that it can be streamlined and the compliance burden is reduced. The second thing to the government, I would
think is that the returns should be filed instead of monthly. It should be all brought in quarterly, or for so that the tax payments are less in the huge, because every single day the team is working continuously for the compliances, and it really affects a lot of people. So for their compliances, and it will be much streamlined. The process will be much streamlined. Instead of monthly, it can be brought into quarterly or half yearly.
Thank you very much for your input, sir. And we have a questions in our Q&A box. Most of the questions is already answered by Yogesh sir, and 4 question is unanswered. So, can you all speaker please check as per your topic, Miss? Because and if anyone of you can also answer the on ITC issue, because our speaker Mr. Agrawal is not here. He has some emergency, so he leave the uh, portal. So I request to all of you, please answer the queries related to his topic also. So first question
Right.
is, can we claim ITC in such a case, or it is restricted under section 17(5)?
So it's not the question is not clarified or
Complete. Yes,
elaborated.
it's
Yeah,
an
yes.
incomplete question. So the second question is, the second issue is whether bill to and ship to transactions happen within the same legal entity, since section 10(1)(b) uses the phrase third party and not registered and distinct person. What qualifies as third parties in which is not defined in the GST law?
So I think this is an open-ended question, that it is under litigation, but because third person, whether it will be considered as distinct person or not, it is a matter of question. But in my view, since the distinct person should also qualify, because they have different returns, different login credentials, different registrations. So I feel that in my view, it should be considered as third person. It should qualify for third person. It is not the separate legal person it is mentioned. So accordingly, that the distinct person should also be qualified as third person.
Yeah. So I agree with Dikesh. This third party expression should also cover the distinct person, for the reason that the GST law has specifically created this distinct person category to distinguish between two separate GSTNs of a single person. I'll give you a class example of classic case. Any supply will be supply of goods. So if you are selling something, or if you are transferring certain goods, it will be treated as supply of goods only when the transfer of title is transferred. If you see schedule 2, entry number 1, it says the supply shall be treated as supply of goods when there is a transfer of title in goods. Now you are making a stock transfer. Under GST, it will be treated as supply of goods, but there is no transfer of title. Title, for transfer of title, there has to be two different legal person, but there are no two different legal persons. Still, you are saying that stock transfer of goods is a supply of goods. So GST law is designed in a way that they have created a deeming distinction between two branches of a single legal entity as the two different persons. So I agree with the case that the third party should also cover the other distinct person.
So next question is, how the ITC is to be distributed
Just
under ISD?
Akshat, just a
Yes.
small point. I mean, on this question, while
Hmm.
both Vikesh and Yogesh has provided the clarification, I have not honestly understood the requirement of doing a bill to ship to within the same legal entity. I mean, how this question is coming up, and this is a peculiar transaction that we are looking at. So,
So
but yeah,
yeah.
if there is a situation, I would just request people to ask the questions in a on a larger principle basis, because guys, if you guys start putting a specific a transaction and want to have an answer, please understand we have not got the full brief about how the transaction is structured, and therefore what we are telling you is off the hand about how the law is. So don't take it as a legal advice something sometimes. Generally, I advise people not to ask for specific transactions because there are a lot of background to a transaction which is not mentioned in the question, and we don't take our response as a legal advice on how it should be conducted.
Yeah, it should be means question should be industry specific or the means theme specific, not a in particular company to company case.
Yeah.
If you have any company to company case, you can directly reach out to our speaker after the session, so they can give you the personal advice as per your case.
Anyways, Akshat, I think whatever question has been posed, even if it is specific, so I'll be happy to answer that. Of course, as Jatin mentioned with the rider, that this should not be considered as a legal opinion from
Yeah.
any of the speaker's side. Of course, there are many variables to be understood before coming to a legal conclusion. So I think we can address all these questions,
Yes,
but
yes,
of course, with
definitely,
this,
definitely.
yeah.
So next question is how the ITC is to be distributed under ISD when the original supply is for more than one tax period covered under the service invoice.
See, in terms of the section of input service distributor, section number 20 and rules made thereunder, if you see the ITC is to be distributed basis the invoicing. Okay. So whether it is covered, one invoice is covering more than one tax period doesn't matter as long as you have the invoice. For example, I'll give you an example of insurance, AMC, annual maintenance charges. You receive the invoice on the end of the every year or maybe in the beginning of every year, and the services are being supplied for the entire year. That doesn't mean that you'll have to distribute proportionate those expenses and distribute under ISD for the entire year. So you should keep the invoice as your basis for distribution under the ISD. Next, Akshat, is Ajit Sutar. So this is pertaining to the automobile sector. We have actually dealt with this issue many years before. It's not new. So what they are saying, I'll explain. So in the automobile sector, I'll give you an example of live example. Let's say BMW is there. Okay. Now BMW wants to import, let's say, a particular type of screw from India. Okay. And for importing, manufacturing those screw, first the Indian component manufacturer will have to create a mold of that screw. And Indian manufacturer tells to BMW that I will first create a mold. For this, I will charge you this amount. Then I will keep this mold and manufacture the screw from it, and then I will export you the screws. So the question is whether the amount charged for the mold shall be considered as export of those goods, or it will be considered as export of service, or the place of supply shall be in India and he will have to charge CGST plus SGST. This is a very, this question arose around 6, 7 years back when we dealt with this issue. So we strategize this transaction in a way that uh, there is no loss of margin on that particular mold, because if you see those rules, it is a supply of goods because you are charging for goods, you are manufacturing goods, you are giving the ownership to the BMW and you're charging for that amount. But since the goods are installed or kept within your factory, the place of supply cannot be outside India because it is not an export. Export is when goods are going outside India to a place, goods are going up to a place outside India. So you will have to charge CGST plus SGST, but you can still design this transaction in a way that this 18% GST is not lost. There are multiple way of designing the transaction and legal way of designing the transaction. I'm not saying tax evasion. I'm saying designing the transaction in a way that you manufacture the mold, you keep the mold with you, manufacture component from that mold and send it across the country. So, for understanding this transaction, just ping me personally. I will tell you how to design the transaction and we can discuss it.
Okay, sir, you have any comment on this?
So I totally agree with Yogesh. Whatever he said, so I don't want to reiterate. So that's it.
Sure. So our next question is, what is your view on Daniel of IGST paid through TR6 challan rate differential?
With respect. Yeah. So,
Okay.
what is your view on denial of IGST paid through TR6 challan with respect to differential import transaction? As I explained in my slide also that this recent question was posed, I think in case of in Madras High Court, before the Madras High Court, couple of days back only, the Madras High Court issued notice to the department to analyze this case whether TR6 challan is a valid document for availing the input tax credit. I will not give my views with, because of course this is a litigative matter and there are matter is already sub judice, but I can give you the backing that rule 3637 they do not prescribe TR6 challan as the valid document for availing the input tax credit. It is a tax paying document, that is no doubt at all. And in L&T IHI consortium, the Bombay High Court have already stated that receipt voucher is a tax paying document, so you can avail the input tax credit on receipt voucher. So by that logic, credit can be availed on TR6 basis, because TR6 is also tax paying document. But what I can advise you is that when you pay something, you ask the department to issue an assessment order or reassessment order. Okay, so in one of our case, the department has not issued assessment or reassessment order, but they have issued a letter saying that you have paid this amount against this bill of entry. There is no need for reassessment. You can avail the input tax credit under GST law. This is the letter we got from custom officer, and then we were safe. So I would suggest, instead of litigating the matter, just go for assessment or reassessment or ask custom to issue a letter in this case. Akshat, you are not audible. You are on mute.
Oh, sorry. So we have one more question, and this is the last question of the day because we are running out of the time. And I request all the participants, please share all your queries with us over the email so that we can share with the speakers and they can answer all your queries. And for your personal queries, you can connect with them. We will share the contact detail of all the speakers with you. So, sir, our question is, we are export buyer paid dollar, suppliers is in SCZ and issues dollar invoice. Now, to save working capital 12 rate for pharma blockage on GST, we are opening EEFC account. Good will be stuffed in SCZ and custom cleared within SCZ. Can we issue export invoice without GST?
Mr. Dharmesh, can you elaborate this? Because I am finding this like contradictory. Maybe you wanted to say something else. Goods will be stuffed in SCZ and custom cleared within SCZ. So custom clearing, are you meaning the export clearance or import clearance? And if it is import clearance, how you're asking whether we can issue the export invoice? If Akshat, do we have an option to
I
have conversation
No, sir,
with
not right
okay.
now. And we are also running out of the time. It's
Okay, no
already.
worries, no
So,
worries.
Mr. Dharmesh, I request you to send all your queries through email and we will send your queries to the speaker. They will answer you. And all the other participants, those are having their questions with them only, not posted here. We request them to send all the queries here by email to us. Thank you very much to all our speaker, all our partner. A special thanks to our Gravitas Legal, GABA and Company, Aurora Law Offices, and AKM Global for their support and their knowledge sharing with our participant. And we look forward much more interactive session for our audience, for our members in future as well. Thank you very much.
So thank you everyone.
Thank you, Akshat.